Hey guys, hello and welcome back to Green Pips Effects. And on today's video, guys, we're going to be breaking down this gold entry right here, which we took today through smart money concepts. Now, before we get into that, let's just clear this whole charade here, right? And let's get into it. Okay, so what we had on gold was a pretty much bullish market until these changes of character right here. Until right here, right? This is when the market changed its character from bullish to bearish, right? So as you can see, we had a series of high highs and high lows being formed until this area here, when price created this high, which pretty much came from this low right here, and then price came down to take out this low and create a lower low. And from that, price just made this slight pullback right here, and then broke structure once again and created this as a new lower low. So again, a series of lower lows and lower highs started to be put into place in the market. And after that, this right here was created as a lower high, right? Which just came into this area of demand, right? I mean supply right here. And then price broke off again. Oops, sorry for that. Price just broke off again. I can't get this straight. So price just broke off again and created a lower low. And from this lower low, price made this pullback again and created this right here as the lower high into this area of supply here. And from there, we're just sitting in this range now for quite some time, right? So we were pretty much just sitting around in this range from this high right here, from this high right here, right, high and a low, right? So this is the range that we were currently sitting on until today. This range right here, right? The range from a high that created this low, right? And then price pulled back into this area of supply right here, but never broke off, right? It just wicked above to indicate that there was some sort of absorption taking place, just a liquidity grab and nothing else. And then from there, price made its way back down, right? Now, making its way back down, we're supposed to see price coming all the way down here and taking out this low to indicate that, okay, so let me just make this large and put it in the middle of the screen right here. Okay, so we're supposed to see this this price action coming all the way down here to take out this low, but as you can see, that never happened. And instead we just had okay, so I was just gonna do that. And instead we had price coming into this area of demand in here, and then gaining an opposite reaction towards the opposite side, where of course we're now in a range. So this whole thing in here, right, from this high to this low is intermediary price action, right? This whole area in here, this is just intermediary price action. However, you could choose whether to hold back and see if price either breaks bullish or bearish, but or you could just if you are a professional trader and you know what you're doing, then you could dive into this intermediary price action and trade off of these areas in here, especially if you're a day trader like me. But mind you that these intermediary price actions are rather confucius, since the liquidity game inside these areas is pretty much intense. So if you do not know what you're doing, then you better hold out and wait, right? Patience is key. So as I was saying, right, so after the creation of this low here from this area of demand, price came back up and took out this high here, which actually created this low, to make a change of character, which is of course an internal change of character, right? And then from there, price just came back into this area of demand that caused this change of character. And then as you can see, price kept going bullish, right? After this break here, we had that high being formed, we had this low being formed, we had also a high being formed, and then we had this change of character at this break right here, which led to the formation of this low, right, which came from this high here. So price came back, of course, into an area of demand and did that mitigation, and from there price went bearish again to break this low right here, right? Okay, so this low was broken and then a lower low was created. Now within the creation of this lower low, right, we had, like I said, the liquidity game being played in here, right? So we had this trend line liquidity being created over time, and this low pretty much just came okay, so we could just put it all the way up here, right? So I had this trend line liquidity being formed over time, and this low right here just came out to clear all this trend line liquidity being formed. And after liquidity was taken by this low, look at what price did, right? So price now, so this is the high that was holding this low, right? So price now drizzles around within this area, and then finally, boom, we have a re-break bullish, right? So you can just remove that, and then we had this re-break bullish right here, so we could just put this in a proper drawing like that. So we had this as a change of character once again, right? So we had a change of structure bullish, right? So when we have a bearish break of structure and an instant change of character to the top side, or a bullish change of character, then we know that that market is more likely than not just to remain bullish. So at this point, we already knew that we had a context of a bullish market, and this high right here was being held by what? It was being held by this low down here, right? So this is the range that we were particularly sitting on, right? So this right here was the range that we were sitting on, a range from this high to this low, right? So this is our range that we were just sitting on and waiting to see price play out, right? So if price was to, you know, come down and break this low, then we would know that this market had once again switched to the bearish side. But of course, what we were targeting, since we knew that this market was a bullish market, right? We was targeting this right here, this high right here, to be taken as a part of liquidity. And if price was strong enough to take out these highs, these overall highs up here, as a part of major liquidity. Now, with that being said, right, in order to catch that buy, then we had to know the concept of supply and demand, right? And in this case, since it's a bullish market and we're looking for a bullish trade, then we're going to look for a potential demand zone that price is, you know, more probably than not going to retrace into. And after that retracement into that area of demand, from there, we can now take our trade and go bullish, right? So basically, the demand zone that we were actually looking at Green Pips FX Academy was this little man right here. So this is the area that we were looking at, right? So you're gonna ask me questions, right? So if you're here, you would have asked me this question, like, why didn't you take the trade right here? Okay, so if we come back to the original point of sense, right? So this area, right? So price reached this area around 22 hours 30, right? So it's 22:30 hours, right? It's off session. It's almost midnight for me, and I don't trade during that time, right? I'm a day trader and I only trade during sessions. So at this time, I was completely off the charts. There was nothing for me to do, right? So, you know, this is also called the Asian range, right? So it's basically just liquidity. Now I come in the market today morning, and what do I see, right? So this was today morning during the London session, right? When price had created this overall charade here as a part of Asian range. And look at what price did, right? So price just came down, cleared all this Asian liquidity right here, which is of course the part of sell side liquidity. So all the sell side liquidity was cleared with this wick here, which also did a re-mitigation in our area of demand. So this right here was my entry. So that right there was my entry, that was my stop, and my first take profit target was this high right there, right? This high here. And if price was to break this high here, and you know, cause for all I know, price could literally just come here, right? Wake above and then instantly go bearish and take out the lows, right? That could happen. Why? Because there's liquidity also being left in this side of the market. So there is sell side liquidity, but you know, price creates and takes liquidity over time. So you just have to know which liquidity is going to be taken first before the other. And at this point, this right here for me was the next liquidity run, which is the next liquidity run. And my other take profit target was this overall high here, right? So this high here, which held this range, right? So if price was going to go bullish, then this is the high that I was going to target on as liquidity, right? And if price wants to still go bullish, right? So I'd be looking at these areas of supply here. Oops, I don't know what did I just hear over there, but you know, no worries. So there we are, right? So this is the trade that I have, and I'm still holding this towards new price action. And you know, I hope you enjoyed the video. I hope you found this video informative, and if it was, then don't forget to like, subscribe if you haven't, turn that bell button on for notifications, and of course, if you want to find a broker who you can trust and trade with, then Mugen Markets is the solution for you. The link is just in the description below. Stay safe, everybody. Have a nice trading week, and peace out.